Hey traders, happy Friday morning. This is Ron Haidt at Market Tamer. Hope you're doing great. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues shall always be addressed with your financial advisor. We'll kick off here with the SPY, which I have a long-term bullish position in. We were down just a little bit yesterday, but we're still holding above the blue line, which is the 5-day EMA, and we're holding above the trading range that began pretty much in January. Target remains these highs. Now, right now, the ES futures, as of about 6:22 a.m. Eastern, are pulling back a little bit. They were basically flat. Now we're down about 7-8 points. Unless there's a terrible sell-off today, the bulls are going to get the edge walking into next week because we're above essentially all these moving averages. If we take a look at the DIA, we'll zoom in here. Let's go ahead and put this aside. We're still in the trading range. The Dow is definitely lagging. The Qs, if I zoom in, we're a little below the 5-day, but still above the 20. We're still riding this channel higher. And then if we go to the IWM, which is the Russell 2000 ETF, what we can see here is a nice update on Friday. If I zoom in, we're back up challenging that double top. So we're getting really close here to new all-time highs. Now, Microsoft finished the day, if I zoom in from January to now, finished the day around 104.40. If I pop this out and type in Microsoft, we were up around 108 just a little bit ago. Now we're at 107, about a half. So it's new all-time highs here on Microsoft. Now, Skechers. I talked about this earlier in the week in a members session here at Market Tamer. Skechers was moving up, started to get inside the gap. So technically it's starting to break out. However, earnings season, if you ever traded Skechers before, this stock can have massive gaps up and down. Usually, as with most stocks, the gap downs are much more violent than the gap ups. Well, if I type in Skechers, you'll see what I'm talking about. It's down below 25 bucks. This thing is down about, $8 a share or so. That's going to put us right down, and we're going to fill the gap up from October last year. This is another reason why protective puts are so valuable. So we'll see where the stock settles today. This could be another good exercise on Sunday to see how that protective put plays out. And I also received a question on what consists of a collar trade, and it goes to the Netflix example. So let me just stay here on Skechers. Since we're looking at Skechers, a collar trade involves actually owning shares, having one short call per 100 shares, and then having one long put per 100 shares. Now, we can do that in ratios where we could have more long puts than long stock, but we would not want to typically have more short calls than long stock because that results in a potential naked position. And that's a very, very dangerous situation to be in. So it's often referred to as a 1-to-1. One short call per 100 shares, one long put per 100 shares of stock. Now, if I do transition to Netflix, here we go. The stock rallied, got back above the 50-day. It's now rolling over. So the folks that were more cautious and still holding this long put, they're pretty happy right now. The stock is drifting down. The support target is going to be right around 345-ish, just give or take a buck or so. The low was 344 just 2 days ago on Tuesday. That would be the target right now. So that's still 20 bucks lower. In this situation, the short call, I could potentially buy that back right now or just leave it sit, hold the long stock, and hold the long put. And then if it breaks the gap down low from Tuesday, I could even consider potentially adding more long puts if I wanted to. So I hope you find that helpful. If you have follow-up questions, you want to make posts to the YouTube channel or just send me an email, which is even more ideal, at cs@markettamer.com. I can answer those from an educational perspective in Sunday's video because we will go back and take a look at how the Skechers options would have played out. All right, last but not least, we'll wrap up this video. Here's eBay. It's gapping down. I'm going to have to go back and do multi-year support. eBay, I was actually reading an interesting article. I forget where it was, but Amazon supposedly has 90+% or something of internet sales. And eBay has like 4% or 6% or something. That's the next closest competitor. It's absolutely extraordinary. So support here on eBay is right where it's at, then there's a whole bunch of other swing lows. So you can make an argument and say, frankly, anywhere in here could be support. The bigger support's down here. But unless eBay can turn something around right now, those kind of data, that type of data, which is so biased and one-sided, is just not good for eBay. So if I had to pick one stock or the other, I don't necessarily have to be bearish on eBay, but I just want to make it be even more bullish on Amazon. All right, so that's it, folks. Again, a rare Friday morning video. I'll be back with you in the Sunday video. So have a fantastic Friday and a super weekend ahead. Take care.